Anna, is it right for the market to shake this off?
Good morning. I don't think this has short-term consequences for the markets, and I think there's a reason why it's shaking it off. It's not a short-term trading event. I do think that there's a long-term consequence of this. I know that energy companies are soaring because of this idea that they will be able to go in and extract some of that oil, but frankly, that's not a 2026 story. The longer play here really is, I think, geopolitical. Think about where oil matters. Russia's seller of oil, China is buyer of oil, and of course, Middle East, we all know that there's a lot of oil involved there. So if we think about where the conflicts are around the world and where and how the U.S. is involved in those conflicts, I think this move in Venezuela is more of a chess game that's a longer run game rather than a short-term move.
Well, boy, has the tech investment community been trying to dissect the chess game that is US-China trade and tariff. How does it affect that in 2026, do you think, Anna?
Well, you know, throughout 2026, we're supposed to be talking with China about tariffs. And at the center of those tariff and trade talks really is rare earth minerals, AI chips, all of those things, right? And so if you're China and you're looking at the development over the weekend and you realize that in terms of natural resources, U.S. has taken control over a lot of the oil that they will need as well. It sort of changes the game and who has the upper hand in some of these talks that we're expecting to be in 2026. So I think this puts, you know, strategically speaking, the U.S. in a more powerful position in some of these trade talks. So it'll be interesting to see how this all pans out in terms of rare earth minerals and, of course, China buying potentially Nvidia chips as well.
Okay, so strategically thinking, for an investor right now, is it wise to be powering Nvidia higher, to be seeing Tesla rocketing up on the green today? More broadly, should the AI trade be back on for 2026?
I think 2026 is going to be a very interesting year for some of this trade that we've seen powering through the years. I think, first of all, there is this idea that a lot of IPOs will come into play in 2026. We will see how easy or difficult it is for a lot of these companies to fundraise, especially those that have really, really high valuations, whether or not the investors really have the appetite for these things. And as for Nvidia and Tesla, they have other problems, really. I mean, Nvidia has issues with TPUs coming online. And even though I do think that they have a lot of market share still, there are things to think about. For Tesla, there's also BYD, right? So it's not so much that it is about AI powering through. I think there's real competition out there that these companies need to be thinking about.
Well, it's interesting. We're going to be hearing from Jensen Huang later today at CES, from Lisa Su of AMD. What do you think they can give to the market that backs up the market share, certainly of Nvidia at least?
Yeah, I think clearer guidance is definitely helpful. I know that the Nvidia has certainly given a clearer guidance for 2026, and there seems to be a lot of demand, but they're going to have to answer to sort of the next best thing, right? So what's beyond the Blackwell chips? What's beyond the relationships with OpenAI and other big players out there? I think investors need to hear something new in terms of partnerships as well as technological advancement for a lot of this excitement to continue into 2026.
So, Anna, where do you stand in optimism versus pessimism for 2026? If at this moment there are still many more questions and perhaps the market isn't factoring in some of the risks, should you be buying in at these levels?
Well, you know, if you're already invested, I think there's room for markets to run, but not without any volatility here. I don't think the market is so excited that, you know, analysts looking at 15% year-over-year growth in the S&P 500 companies, that might be exciting on a fundamental level, and hopefully it broadens out to the rest of the sectors in the S&P 500 index. But there are multiples that are very, very stretched, right? So especially with this talks with China that not only impacts tech, but also other areas of the economy, I think we're due for some volatility, but weather the volatility by having a robust portfolio, and that is always recommended by the advisor community.
What's been really interesting is, well, the ongoing dispersion between software and hardware names. We saw that in particular on Friday, and our great producer Dan Curtis has been pointing out just the disparity that you saw in software indices that fell some 3% on Friday, and then we rallied in when you're looking at the semiconductor index in particular, more than 4%. Is that going to continue? How much more support do we need for software to show that it can benefit from the AI trade?
Yeah, I think 2026 is still going to be a picks and shovels year. Building these things out and the demand there is for it, that's not something that can be done in a year or two. I think this is a multiple year story. And certainly on the software side, there's a lot of experimentation still. And if you're a customer sort of subscribing to some of these things and dipping your toes in, there's no guarantee that that's going to be sticky. I mean, I think we're thinking about things like SaaS, where if you have a subscription to something and you incorporate those software into your day to day, it becomes super sticky. I don't think that's necessarily where we are with the software on the AI side. I think people are experimenting. So until we can see some stickiness and real incorporation and integration of those software into the day-to-day of the businesses, I would be a little bit skeptical as well. And I think that's what the markets are actually expressing.